Gold is down 25% so far this year, coming off its worst quarter in over 90 years. Some investors are saying lower prices are an opportunity to buy. Scott Carter is one of them. He is with us now from Regal Capital, where he is CEO of the largest precious metals dealer. He is with us from LA. Scott, you're saying it's time to buy gold. Is this the right level?
Well, in my view it is. Thanks for having me. We're seeing prices of gold at 2010 levels, and nothing's really changed economically, Deidre. We still have record debt. We still have Europe a mess. We still have an economy on the brink, and all of these are great factors that long-term should be great for the price of gold continuing to appreciate over time.
Now, you sell not futures, but you actually sell physical gold, palladium, silver. Is that right?
That's right, and it's an incredible point because right now physical gold, the purchase of physical gold continues to increase while the paper markets are declining. So you're seeing a disconnect, if you will, in the markets where the paper markets, the future contracts are driving the price down, yet you see physical demand at all-time highs. As a matter of fact, the U.S. Mint decided, or they didn't have the supply, so they stopped production of silver coins earlier this year. So it's a bit of a disconnect, but I think investors are seeing this as an opportunity because of the low price to jump in.
So, Scott, I mean, do you take that as a sign of fear? I mean, I know you deal with a lot of wealthy clients. Would people just rather have gold bars in a bank vault or under their bed than currency?
Well, certainly fear is always a component of any investor, but I think this is more about the dollar. I think that U.S. debt is at $16 trillion and it's continuing to expand. I think individuals, if they're looking as long-term investors, which gold investors are, if they're looking 5 years from now, they think the buying power of their dollar is going to be less. And historically, gold has performed well in that environment. If you look at gold over the last decade, it's up over 400%. So we've had a pullback over the last 18 months, but if you look at the long-term performance, it's hard to beat this asset class. So investors are saying, boy, the prices drop back, the economy's still tough, the Fed is still printing money. Let me get more of a position or add my position for the first time because I think long term this will be a great asset in my portfolio.
I was going to ask you, Scott, how many times the Fed comes up in your conversations with your clients?
It comes up quite a bit. I think that when the Fed comes out and says we're going to continue buying bonds, they get very concerned. These are individuals that are conservative investors. They have cash or they have bonds, and they're looking to diversify. They're very concerned about that. They're concerned about our U.S. debt, as is everyone else. So when you can take those factors into account, and you take into account that central banks and European countries and Asian countries are buying gold, the individual investor is saying, why shouldn't I? And now with prices back 30% off of their highs, this is a great time to get a beachhead, to get started for the long term because they think gold is going to continue to perform well.
I know you disagree, Scott, but Jeff Gundlach, famous investor, said gold is the worst asset on the planet. Did you hear him say that?
I did. I mean, this is an asset that you couldn't find more comments that are more bearish. It's, despite its performance, it's up, as I said, it's up over 400% over a decade, and nobody should bet the ranch on gold, but to not have it in your portfolio, given this economic environment, doesn't make sense. We're at low interest rates. We're not paying much of a yield on anything in bonds. So those typical things that are a negative for gold don't exist today. So why not have it as a part of a portfolio when it's gone from 250 to 1900, now it's back down to 1200, but the performance level over the next 4 or 5 years, if the Fed keeps printing money, could go back to 13, 14, 1500. Now's the time for individual investors and institutional investors to buy physical gold, and you're seeing that in the demand.
Scott, thank you very much for the time, for lending us your expertise. Scott Carter joining us there, CEO of Regal Capital, with us from our LA bureau.